On Business Incorporated today, IMF Executive Director's new special drawing ring allocation of $650 billion boost reserves. Egypt's Suez Canal blockade by large container ship. And Somalia and IFC signed deal to support public-private partnerships. Hello and welcome to the program. I'm Chimeze Obi Iwagu. We'll begin the midweek show with intraday market numbers, which were mostly positive. Only the JSE index in South Africa was negative by 0.02%. Elsewhere, Nigeria's main index rose 0.34% as investors reacted to positive earnings released by industrial giant Dangote Cement. The EGX 30 surged by 2.40%. Kenya ended Tuesday's session positive. It was a similar picture in the Middle East where major markets were positive except one. The Qatari index rose the most by 0.19%, while Saudi Arabia's index added 0.02%. In the UAE, Abu Dhabi's index advanced 0.17%. On the flip side, Dubai's index shaved off 0.72%. And in Europe, stocks retreated today amid renewed concerns over the global economic recovery outlook, given a surge of COVID-19 infections in Europe and renewed lockdowns. Let's talk to Chelsea now for more details from the European space. Good afternoon, Chelsea. Well, global markets are under pressure with the focus on rising coronavirus infections in Europe. How are markets trading in there in Frankfurt?
Well, stocks are also down here in Frankfurt as well. The DAX is down about 0.5% at the moment, and investors do finally seem to be taking this third wave of infection seriously here in Europe. Over the past couple of weeks, we've seen stocks continue to rise, and there's still be quite a lot of optimism about the economic outlook, but it does seem to be setting in that Europe is facing a very strong third wave, and we've heard comments from politicians really across Europe today just stressing how serious the situation is. In France, for example, officials are warning that the hospital systems are becoming increasingly overloaded. So that is a serious concern for investors. But we did get a bit of a positive economic data here out of the Eurozone today. The purchasing managers index, a very closely watched economic indicator, actually rose in Europe for the first time in 6 months in March. So that's in part because of the strength of the manufacturing sector, but it also came as other countries had been earlier this month actually easing lockdowns. That's something that's likely to change as we return to these lockdowns, and that, of course, is still going to be a major concern for investors.
And the EU is set to tighten its export rules today as it threatens to ban shipments of coronavirus vaccines abroad. What are these new rules?
So at one point, the EU had been threatening to put a general ban on exports of vaccines. So no vaccines would have been able to leave the European Union. Now they're talking more about targeted and more of a case-by-case situation, where a system where they would look at these vaccine doses that are potentially going to be exported, see where they're going to be going, and look at what the coronavirus situation in those countries are. For example, if a country is reporting a much higher rate of vaccination, if their cases are much lower, then the EU could potentially say, we need those vaccines more than that other country. This comes as the EU has really indicated that it feels like it's being shortchanged by both other countries and vaccine companies. The EU has really fallen behind the US and the UK in terms of vaccination rates, in part because vaccine shipments from companies like AstraZeneca have been much lower than the companies had promised the EU. But as well, the EU has complained that other countries like the US and the UK aren't allowing vaccines to be exported to Europe. So Europe is saying, if you're not going to let vaccines come here, we're not going to let them go there. But this is really a major diplomatic row at this point. A lot of countries are saying that the EU needs to be very careful because this could really cause larger problems for the shipment of both vaccines and products that go into vaccines.
And a massive cargo ship is blocking the Suez Canal in Egypt. What kind of impact could this have on global trade?
Well, analysts have been warning that this could have really a domino effect on the global trading system because the Suez Canal is such a crucial shipping route. It handles about 12% of global trade, about 1 million barrels of oil a day, and it's particularly important for connecting ports here in Europe to those in Asia. So because of this blockage, we've already seen about 100 ships also being stuck in this canal. That means they'll either have to divert and go along route. They could also face potentially higher shipping charges because of these delays. So this could really impact consumers and companies on really around the world. And analysts say that that's potentially what we're going to see in the days ahead. What we've heard from officials along the canal is that they are hopeful that this blockage will be removed soon, that they'll be able to get the ship moving again, potentially today, potentially tomorrow. So it could end up being a short blockage, but it is likely to still have ramifications for companies and consumers around the world.
Thank you very much for your time there, Chelsea. You enjoy the rest of the day. And in the UK, the sterling fell to its lowest level against the dollar in almost 7 weeks after the surprise fall in UK inflation to 0.4% in February. The latest PMI readings also bode well for the UK economy. All right, let's talk to Juliana now. Hello, Juliana. Good afternoon. Well, two important data out this morning, the inflation data and the PMI, surprisingly good. But how are investors chewing these figures?
Yeah, well, red, Chimezie, is the colour of the FTSE at intraday. It's all really down to what we're seeing in Europe that you've just been talking about with Chelsea and this third wave that's sweeping its way across the continent, likely to roll up into the British shores. And this is why the FTSE's dragged even lower. The travel and tourism stocks haven't been doing well over the past couple of days. They're not doing well at all today. As you said, this morning we had inflation figures, 0.4%, pretty good for the consumer if you like to buy your goods cheap, but not great for the British economy. It doesn't paint a good picture of the British economy because it shows that, consumer goods are not as profitable or not. People do not want to buy at the moment. And we are seeing that because we're still in the midst of this lockdown. We have had positive PMI data. The composite index, the flash PMI for March has come in and it is good. It's up to 56.1. Some economists had put it down to about 51.1. So this is much greater than people had hoped. And I suppose this is because business activity has picked up. There's lots of optimism. The children went back to school. Businesses are preparing for the reopening of society. But there are some major concerns. Even though this vaccination rollout programme is going exceptionally well in the UK, the fear of a blockade is causing people to have some anxiety. And of course, Brits do love their summer holiday abroad, Chimezie, and if they can't get that, investors won't be happy. So if we look at the numbers, the all share is down 0.08%, the FTSE 100 is down by 0.15%, and the FTSE 250, the domestic market, up slightly at 0.25%. In currencies, as you said, the British pound down against the US dollar by 0.26%, also down against the euro by 0.08%, and down against the Japanese yen by 0.13% at intraday.
I obviously understand that after all, the summer is coming fast. Okay, one of the UK's top fund managers has revealed it will not invest in the meal delivery firm Deliveroo when it floats on the stock market in early April, partly because of the way the company treats its workers. How do you see this social issue affecting the shares when it finally floats?
Unfortunately, Chimezie, I cannot hear you. I'm not sure if you can hear me. If you can hear me, give me
I can
nod.
hear you. I can hear you very well. I can hear you very well. Yeah, talking about Deliveroo IPO. I can hear you very well.
Chimezie, you can hear me. I'm using my crystal ball here to guess that you're talking about Deliveroo, right? Yes,
Absolutely,
we're talking about
absolutely.
Deliveroo. And as you know, we've been speaking about over the past couple of months, the gig economy is coming under increasing strain because lots of millions of their workers across the world are not really fair that they've been working exceptionally hard during the pandemic, but they're not getting the employment rights that we're seeing with other workers. This was brought into the foray, of course, because Uber lost that.
Go ahead, Juliana. We can hear you. We can hear you. We can hear you. We can hear you. Well, we seem to be having some audio problems there with Juliana, but we hope to get her back and get that sorted out. In the meantime, let's look at how trading day was in the Asian Pacific. Of course, shares were largely lower today as concerns over the world's recovery from the pandemic weighed on investor sentiment. The Hang Seng Index in Hong Kong was one of the biggest losers among the region's major markets, closing 2.03% lower, 27,918.14. In Japan, the Nikkei 225 slipped 2.04% to close at 28,405.52, while the Topix Index declined 2.18% to finish its trading day at 1,928.58. Mainland Chinese stocks also fell on the day, with the Shanghai Composite down 1.3% to 3,367.06, while the Shenzhen component shared 1.469% to 13,407.35. Over in South Korea, the Kospi slid 0.28% to finish its trading day at 2,996.35, while shares in Australia bucked the overall trend regionally as the S&P ASX 200 gained 0.5%. When we look at the MSCI's broadest index of Asia Pacific shares, that's outside Japan, that slipped 1.22%. And in the U.S., stock futures edged higher in early morning trading, looking to shrug off renewed investor concern about the global recovery from the coronavirus pandemic. Well, Dow futures gained 84 points, while S&P 500 futures were higher and Nasdaq 100 futures rose more than 100 points. On Tuesday, stocks tied to an economic recovery led the losses amid rising new coronavirus cases in the U.S. and abroad. The Dow Jones Industrial Average lost more than 300 points, dragged down by a 3.4% drop in Caterpillar stock. The S&P 500 fell 0.76% with major losses from airlines, and the Nasdaq Composite dropped 1.12% as Facebook, Apple, and Tesla all closed lower. On the global oil market, prices edged higher in early trade as investors looked for bargains following the previous day's plunge. But gains were capped as pandemic lockdowns in Europe and a build in U.S. crude stores curbed risk appetite and raised oversupply fears. Brent crude futures rose 0.4% to $61.06 a barrel after tumbling 5.9% yesterday, while West Texas Intermediate crude futures climbed 0.3% to $57.95 a barrel. Both benchmark touched their lowest level since early February on Tuesday and have now fallen more than 14% from their recent highs earlier this month. The front-month spread for both Brent and WTI slipped into contango, where front-month contracts are lower than the later months, a sign that demand for prompt crude is declining. And gold prices eased earlier today as the dollar touched a more than two-week high after U.S. Federal Reserve Chair Jerome Powell reassured Congress that inflation would not spiral out of control. Spot gold was slightly down at $1,726 per ounce, while U.S. gold futures rose 0.1% to $1,726 per ounce. The dollar index rose while Treasury yields fell after Powell told U.S. lawmakers he expects inflation to rise over the year, but it will be neither particularly large nor persistent. Among other precious metals, Palladium was later chained at $2,602. Silver rose 0.2% to $25.13, and platinum fell 0.5% to $1,162. We'll take a break, and when we come back, we look at other developments here on the African continent. Just stay with us. The International Monetary Fund's executive directors have opened discussions on a possible special drawing rights of $659 billion to boost reserves and help global recovery from the COVID-19 pandemic. The managing director of the IMF, Kristalina Georgieva, says the new allocation, which will benefit all member countries, will also be a powerful signal of the IMF membership's determination to do everything possible to overcome the worst recession since the Great Depression. Ms. Georgieva says in June, she will present a formal proposal to the executive board to consider the new allocation based on an assessment of member countries' long-term global reserve needs, consistent with the Articles of Agreement and the IMF's mandate. And shipping traffic has essentially been shut down in Egypt's Suez Canal as a cargo container ship considered one of the largest in the world has turned sideways and blocked all traffic. The MV Ever Given, which became grounded on Tuesday due to strong winds in a Panama-flagged container ship that carries trade between Asia and Europe. The situation is threatening to disrupt a global shipping system already strained by the coronavirus pandemic. TUG boats have been deployed to help shift the 400 meters long and 59 meters wide ship, but there are fears it could remain trapped for days. And the International Financial Corporation has signed an agreement with Somalia to help boost the public-private partnerships in the country. The deal is aimed at helping in the improvement of delivery of services, creation of jobs, and enhancement of economic wealth as the Somali government plans to encourage private investment in various subsectors. Under the agreement, the IFC will help the Somali government enact pro-business reforms that foster open and competitive markets, paving the way for the growth of healthier and livelier local business communities. In November last year, IFC signed 2 agreements with the Somali Ministry of Planning, Investment and Economic Development to help encourage both local and foreign investment with the ultimate aim to improve public services, create jobs, and boost economic prosperity. The Monetary Policy Committee of the Bank of Ghana and Central Bank of Nigeria, after meeting and reviewing recent global and domestic developments, decided to maintain the policy rates. The maintenance of the policy rate, which is of keen interest to businesses as it ultimately influences average lending rates on loans, is in line with the projection of economies from both countries. Or we'll have to talk about this decision. We're having our guest from Ghana, Alabi John Kennedy, a managing partner at Bespoke Business Consulting. All right, while we wait for Alabi to come on board, let's look at some of those agreements that are reached here in Nigeria by the Central Bank Monetary Policy Committee.
For the second time this year, the Monetary Policy Committee is meeting to decide on key economic issues. Before this meeting, figures from the National Bureau of Statistics reveals economic indices that are not good for the country. This includes the rise in inflationary pressures, unemployment, and insecurity, which is leading to high prices of food items.
Real GDP, according to National Bureau.
Though the recovery of the nation's economy is gradually taking a new turn thanks to the COVID-19 vaccine, the central bank is promising to consolidate on gains achieved to reflate the economy.
While the bank is intervening significantly in the agricultural sector, the rising insecurity in some food-producing areas is limiting the expected outcomes in terms of supply to the market, thus contributing to the rise in food prices. The committee further noted that the key drivers of the increase in core inflation included the hike in the price of premium motor spirit, PMS, popularly called petrol, upward adjustment in electricity tariffs, and the depreciation of our currency.
There are also concerns raised by the Monetary Committee. This includes how to address issues of rising debt and how to increase investment in infrastructure.
MPC noted that fiscal headroom remained constrained and fragile following the twin shock of the pandemic and oil price volatility and the continued buildup of public debt. MPC noted the bank's innovative efforts towards maintaining exchange rate stability. It also impressed on the management to remain focused on its drive to increase accretion to reserves, especially in its recent incentives to attract diaspora remittances into the country.
The economic outlook for the year 2021 remains gloomy, both at the global and domestic front. The Monetary Policy Committee is hopeful that with the arrival of the COVID-19 vaccines, Nigeria, just like other countries, is on its way to full economic recovery.
And with that, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwago.